Yes, guys, how we all doing? Can let me know in the chat if you guys can hear me all right. Clearly, perfect. Yes, awesome. How's everybody doing? Apologies about the wait and confusion. This is the first time we're running a stream on YouTube, so there's some testing and figuring out to do. I know the quality isn't too high today, unfortunately, so I'll sort that out for the future. I know today's probably, I think it's only 1920 1080. So yeah, next time I'll try and figure out a way to get the quality a little bit better for you guys. So bear with me for this one. We'll try and do more and more going forward. As you guys can see, if you're not already in the Telegram or our Discord, join up. We're posting lots of content in there, lots of free content and value for you guys. So if you're not in there, get in there. All right, so took a trade on NQ today. So the guys in here that trade NQ, this is on the future side of things. So there's probably a few of you in here that trade CFDs, right? Like NAS 100 or US 30. Currently, I'm only involving myself in the futures market. So I was on the E-minis chart today. All right. Ended up closing about $4,000 on this trade. Something we can speak about before going into the actual trade was going forward. I'm going to be focusing more and more on holding more volume. Something I've struggled with in the past sometimes, but the trades I do let play out, maybe this could be a lesson for some of you. The trades I do let play out to my targets, and when they do hit and I'm holding good volume, obviously those are the ones that pay the most, right? So obviously some adjusting to and some testing I'm doing right now currently, but this is one of the trades obviously where it's played out nicely in my favor. Not all the time is it going to, but of course the ones that do are nice. All right, so we'll start off on the higher time frames. Talk about what's been going on this chart. For those that are active on NQ, you can see we had a big sell-off. Okay, this was through late February, all through March, early April. For those of you that are updated on the fundamental side of things, this is when the tariffs were being announced internationally, right? So this is how the market reacted to it. This chart I'm trading right now, this is the June contract, so you can see how it kind of dies off here. If I was to go into, actually we will just take a look on the higher time frames, but here's the regular NQ chart, so you can see how the price action to the left. But yeah, big sell-off, guys, through the tariff talk. So Trump was announcing tariffs through all the countries internationally, which caused the indices to have a big sell-off in the market, grabbing all of these lows. Okay, so you can see we've had internal liquidity left here, okay, and then finally we had imbalances down here that the market ended up tapping into, and we've gotten a massive reaction, okay, ever since. So like, even if you want to, I don't use Fibonacci to trade, but just to measure the move, right, from high to low, you can see now we've already recovered more than 50% of that move, probably like 75% of that move, which is crazy to think about. Overall, I'm extremely bullish on the indices, even like crypto and stuff like that. I'm not going to get into that stuff, but on the indices alone, I'm very bullish. Now, something you need to understand though is, yes, we have some equal highs up here that I am looking for price to run to eventually, but in order for price to get there, we need to be inducing sellers on the way. So this is the higher time frame. I'm on the weekly right now, and we're starting to tap into these imbalances. Okay, something you need to be aware of is most of the time, not all the time, but most of the time, you see how price ran these highs and had this sell off to the downside. This is now going to be an area, retail, okay, pattern traders, any sort of people that look like trade with structure and momentum, they're going to be looking to sell in areas like this. Okay, I don't. However, I'm anticipating reactions, and if the reactions do come along, and let's say we come up to the extreme up here and we get a pullback of some sort, I am overall bullish, right? So I'm going to look for that continuation back up. Okay, but don't just anticipate price to just rocket all the way up, because most of the time it does not happen, right? We need to make sure we have sufficient liquidity to the upside before price takes the highs. All right. So that's my higher time frame perspective. Okay. So again, overall, I am very bullish on the higher time frame, on the long term side of things. Now, coming into intraday stuff. For those of you that trade prop firms on the future side of things, obviously we can't hold past market close. So these are more in and out type trades, usually in and out in the session I'm trading. So if I'm taking trades in AM, usually I'm going to be closing in the AM. Same thing with the PM, right? Because I can't really hold, well, not even can't really, I can't hold into the next day of price action. So all intraday trading for me personally. However, in the future, I might open up a personal on the future side of things so I can hold longer term. But right now, it's just scalps and intradays, okay? So going into intraday price action, I'm just going to hide this indicator because we'll just clean up the chart a bit and go naked right now. Cool. So first, we'll mark on some important times for us to keep an eye on, okay? 3 a.m. For myself, that is London Open. Okay, I never trade London period, but I don't recommend people trade in London for the indices. Okay, this is just a personal preference. However, sure, there's gonna be people out there that do like it. For myself, I'll never be trading the indices through London. Always in New York for myself personally. Okay, but however, this is still a very important time. 3 a.m., which is London Open. 8 a.m. New York Open. Okay, and then Stock Open 9:30. Okay. In coincidence, look how around each these times. So again, 3 a.m. London Open, New York Open 8 a.m. and then Stock Open, moves are occurring. Okay, it's not a coincidence. This is typically when volume is injected into the market. Okay, so what can we see right at London Open? We left this liquidity. This was New York highs from yesterday. Okay, so we left this liquidity. You can see right through London Open, spiked above. Okay, grabbing any sort of liquidity left around these highs or above these highs. Okay, after that, sell off to the downside. Why? Simple stuff. Look at this. Okay, equal lows left down here, or you can call them even relative equals. Either or, you don't need to overcomplicate anything. Keep it as simple as possible. This is just a form of liquidity. Okay, why? From a support standpoint or any sort of retail standpoint, people would have been looking for buys at this area, okay? And of course, look what happens. We induce higher, okay? So what's the purpose of this move? Since we have taken out this high over here, buyers are now induced into the market. So they're going to be looking for buys here, in here, in here. And look how the market actually reacts. And we'll draw this out for you guys. Look, it reacts off this area, okay, to induce buyers in. And it's just a pullback and then a continuation. Again, look at this reaction at the low down here. Okay, why? It's just building liquidity at the low for us to target. All right, so again, false reaction here, false reaction here. It ends up coming and grabbing some sort of internal high and then continuation to the downside. Okay, again, these are not trading hours I'm including myself in, but however, I still want to cover the price action with you guys. Cool. So 5 a.m. we stab these lows out here. So anybody that was buying this asset above these lows, so where my cursor is, they're now trapped, which allows price to move to the upside, okay? And check this out. Since price has taken out this low here, what's the intention behind this move? Sellers are looking to take this thing lower. So look, they are entering positions in here, which pushes price down. However, it's just a pullback, right? From this point, we go long. Why? Look at all this liquidity we've now left. Cool? So you guys are starting to probably see this over and over and over now. Now, where would you be targeting if you were to enter in positions in these areas? The high, okay? Now, we're not a pattern trader, okay? Just because specific highs and lows are taken does not mean we just immediately target them, okay? There needs to be reasoning. There needs to be logic, all right? Since we've taken these lows out, sellers are looking to sell this thing up here again, okay? So we understand that, which tells me there's going to be liquidity above this high. And that's why, look at this move, the volume behind it. There was reason behind that. That's why we had to run to this high, okay? Because there were sellers looking to push this thing lower if I use a replay tool here, okay, they would have wanted to push price lower here. Okay, so they'd be loading up sell positions, anticipating price to just do this. Okay, we understand that. Okay, so now we want to be targeting that high. Okay, we don't ever want to be trading with retail. We want to be trading against them. Okay, so let's clear up the charts a little bit here. That was London, PA. Okay, coming into New York, you can see we have grabbed that liquidity above that high. All right, giving us this pullback. Just from a 5-minute standpoint, we don't need to even go anywhere lower. Grab this internal, okay? Then right at stock open, boom, long again, okay? Let's clean up these lines. The important time I want you guys to be focusing on right now is stock open, okay? Now, for those that are experienced, excuse me, for those of them, for those of you that are experienced with NQ or just indices as a whole, you will obviously understand that stock open is very, very important, right? The way I view stock open is I typically, okay, I'm never going to say 100%, but typically most of the time I'm not taking any trades before 9:30, right? So look at the bottom of my screen right now. It says 9:30. Anywhere to the left, 80-90% of the time, I'm not entering and taking positions, okay? However, to the right of this time, so 9:30 and after, that's when I want to be looking for positions. So my whole perspective, my standpoint on this is I basically view stock open as like a red folder news event. So what happens typically before news events, okay, and then in this example, of course, like I said, it's stock open. But what happens before is we get this choppy PA, right? We build liquidity. And then stock open comes into play. So again, look at the time, 9:30, and we get that run to the upside, okay? Let's mark that on. Perfect. So now that we're trading within an important time for us, right? We allowed stock open to occur. Now, essentially, per our rules, per our system, we can start looking for trades. Obviously, if there's a setup ahead of us, right? So big bullish move to the upside. What have we done here? We have left liquidity. All right. Now, if you think about this from a liquidity standpoint, okay, a liquidity perspective, does it make sense for us to just continue flying higher and higher and higher when we've just left these lows here? No. So what price does is we induce higher. Okay, again, what's the intention behind this move from A to B? It's to induce buyers into the market. Okay, so we take out the high. There's you get your BOS, your market structure shift, whatever you want to call it. Okay, now anybody looking to take this thing long, they're going to be buying down here. However, look what's happened. We've sold off and trapped them with volume, right? With speed. Okay, so anybody looking to long above these lows, they've now been trapped. Okay, and what have you guys learned about what I've just been showing you guys through London is typically when buyers are now trapped, early buyers are trapped, price tends to go and move the other way. Okay, of course we need to be targeting some form of liquidity. Okay, we're not just immediately looking for buys because these lows are taken. Again, there needs to be logic. There needs to be reasoning behind this. But you can see, look, take the lows, and then that price starts moving to the upside, right? Okay, cool. So let's break down what's going on. If you look to the left-hand side over here, this PA, what is that? This is simple liquidity for me. Why? Boom, boom. Okay, you can look at it as smart money trap. You can look at it as Fibonacci retracement. You can look at it as support, right? If you just want to draw it like this, there's a support level for retail that they're buying from. I like to keep it as simple as possible. I understand now that there's liquidity below these lows, okay? So all I want to do is mark that out and drag it over to the side, okay? Perfect. So what happens is big sell-off off the back of stock open, okay? Grabbing internal liquidity from the left-hand side, also trapping anybody that was looking to take this thing long. We understand that. Cool. Now what occurs is, look at this sharp reaction up. Boom. Big bullish candle. So let's use the replay tool here. Cool. So look, anybody that thinks, okay, now liquidity's taken, let's go long, right? Maybe they're using this area down here. They're unaware, okay, that there's still going to be liquidity below this low. So here is going to be a trap. Anybody looking to go long right now, they're going to get trapped, okay? And I need to see this occur. Watch what happens here. So now they're in this area. Look how we even print this 1 minute candle. So this is showing any early traders that, okay, we're going to go long here, right? Look at this rejection off this bullish candle. But no. Right there you go. So we spiked the low. Now, let me move this over. Now that we've spiked this low, okay, we've taken this liquidity from the left-hand side, grabbed anybody that was going long over here, trapped them, grabbed their liquidity. Now I want to see price trade higher. However, okay, do I see any liquidity right now up here? No, nothing. Why? Because we have not respected this area yet. So why would I target this high? Again, we're not pattern traders. Just because we've taken lows out does not mean we're automatically just going to rocket up to the high. Okay, that's not how I trade. I need to make sure there's reasoning, right? I need to make sure there's liquidity for me to target. I'm always waiting for liquidity to get taken, and I'm always going to be targeting, obviously, liquidity in the opposite direction. Always. So let's play price out. Actually, you know what we can do is just get off replay here because I want to show you the executions as well. Actually, I'll show you the executions after. Let's actually get through the breakdown first. So, look at this. Spike the low. Now we start trading higher. Okay? High, low, high, low, high. What is this? Liquidity. Simple stuff. Look. However, I want to talk about something here. Look at this area we've been tapping into and respecting. Okay? Why is this important? Anybody that's looking to take this thing short again, they're entering shorts up here. Stop above this high, or I don't know, maybe up above this high as well. Okay, so they're going to enter positions like this. All right, and again, looking for price to trade lower. Why? Because they have that pattern perspective. They have that pattern mindset of trading. Okay, they see, right? They see this occur, and they want to be selling this area to push price down. But no, that's not how price works. Okay. Again, since we've respected this red area here, I understand that we're now building liquidity above this high. Simple stuff, all right? Now, I want to see some sort of false run occur. What do I mean by that? Look, high to low, false run, perfect. Why is this false? We are taking liquidity out to the downside, okay? So I want to see this occur. I need this to occur for me to take an entry, all right? I don't trade with retail, right? I'm not going to be taking entries in here or in here or in here. Why? This is just a buildup. That's it. It's a buildup of liquidity. Cool. So now that we understand that, I need to wait for this low to get taken out. Why? Because this is liquidity. All right. Now that this has been taken out, price has nowhere to go but up. Okay? Because we've left liquidity at the high. So in order for price to end up trading lower, we need to induce higher, which actually ends up occurring. Right? Taking out these highs. Oops. Taking out these highs here and also this high at the extreme. Right? This external point. For entries, you could have taken an entry anywhere below this low like this. Okay? And stop always going to be below the low from the left-hand side. All right? And if you're the kind of trader that likes the partial, this would definitely be a good partial point. Okay? If you don't want a partial here, my best advice would be at least to manage your position, meaning if you had entry here, stop loss here, once this high goes here, you can see at my crosshair at 11:28 a.m. Once this high gets tagged and we run it, you want to be rolling your stop loss at the minimum. Okay, so partialing or rolling your stop loss at the minimum. Overall, just managing your trade. Okay, because you're gonna be, again, this is futures. You're gonna be over 300 ticks in profit already, floating above a 1 to 3. So you don't want to see price take this high and then maybe sometimes there's a deep pullback before the continuation, and you're gonna have to deal with this mentally. Okay, and it's difficult to do sometimes. So again, entry, partial point, final target is going to be anywhere above this high. And again, you got to understand, why am I going to be targeting this high? Look at the intention behind this sell-off off the back of stock open. This is to induce sellers into the market, thinking that we're just going to go bearish the rest of the day. Okay, so again, they're going to be loading up sell positions in here, loading up sell positions in here. So that tells me liquidity is going to be sitting above this high. Okay, so full target, boom. And if I turn on here, let me show you executions real quick. You're going to see something funny actually over here. But I had to unfortunately test. I'm using a copier, and if you guys do follow me on socials, you'll see that the copier's been acting weird. So I had to test it out real quick, make sure that everything was being copied. But yeah, that's why there's a random sell right here. But then there you go. All the buys here. I ended up closing one con here because I accidentally over risked It is what it is. So a little user error on my part. And then again, look at the target, right? So it just, the thing is, everybody's different. So maybe there's people in the community that would have been targeting this and partialing. That's fine, right? So that way you would have seen another red arrow up here telling me that I partialed there, right? But unfortunately, not unfortunately, for myself, I was confident in the targeting hit. So there is my target. All right. Again, anywhere below this low is an entry. You could have waited for a candle closure, maybe a little bullish rejection. You can take the entry up there. I think one of my cons were added like that. But overall, the important part here is direction. And that's something I've been talking to a lot of people in my community about lately, is direction is the important part, guys. You don't need the very bottom and you don't need the very top. If you guys ever load up your MT5s, your MT4s, or whatever you guys trade on, and when you pull up these and you see these numbers, it doesn't show you your entries, right? It just shows you a blue number or a red number, okay? As long as you're following your system and following your plan, that is the most important part, okay? You don't need the most pitch perfect bottom and you don't need the most pitch perfect top. The direction is what pays the profits, all right? But yeah, that wraps up this study, this breakdown, this case study, whatever you want to call it. I hope you guys enjoyed. Like I said at the beginning of the stream, we're going to be running more of these going forward. Yes, the quality wasn't the best for this one, unfortunately, but me and Abid will work and figure out what we can do to get them better going forward. But yeah, that's it for me, guys. I hope you guys enjoyed this. It will be uploaded on the channel if you want to go back and watch this breakdown as many times as you'd like. For those of you that are in our free Telegram, we'll continue to post more and more in there. If you guys want to watch us trade on a daily basis, of course, we literally just launched our live trading program. So hop in our WAP and you can come and join us and trade with us on a daily basis. Also, we don't have a date for sure yet. Right now it is May 14th. In the coming future, June or July, stay tuned for some updates, but we're going to be launching a really, really in-depth mentorship with myself and Abid. Well, we haven't decided the duration or when it's going to be yet, but keep an eye out. It's going to be some good stuff. So yeah, we got a lot of stuff coming for you guys, but I hope you enjoyed, and we'll talk to you soon. All the best.